Smart Alec Show, baby! Ladies and gentlemen, so joining us today, we have someone who's regarded as an absolute legend at the University of Texas at Austin within the community. He perhaps has the highest approval rating ever for professors at UT that actually teach you tough concepts without just giving you an A and not having you do any work at all. He's somehow developed the secret formula for pushing students while actually teaching them these difficult contexts, and the students absolutely adore him. He's a finance and economics wizard, a learned lawyer, and in the past, he's been tasked with figuring out what in God's name this country was doing that led to the '08 financial crisis. And he's so skilled with his economic prowess that he can break down these tough topics in layman's terms and make someone even like myself, who almost failed out of their accounting and finance entry classes, he can make someone even like myself understand these topics and feel like a genius at them. So, above all, he's an awesome human being. It is with great honor, ladies and gentlemen, Sanford Leeds. Pleasure to have you, Sam.
Alec, that is the best introduction I've ever had. So I got to tell you my old person story real quick. My kids will hate this, but I constantly listen to E Street Radio in my car. You know what that is? It's Springsteen. Okay. And your introduction sounded just like Springsteen when he's introducing the band. I felt like Clarence Clemens or something. That was awesome. That was awesome.
I'm gonna have to check that out. Awesome. I'm glad you like it. You deserve a big entrance, man. Like I said, I'm just a little podcast trying to break onto the scene. So it's a pleasure to have you, and I appreciate your time, man.
That was awesome. Well, it's awesome getting to know you through this semester. So you are an awesome guy. So I'm excited to do this. So thank you.
Awesome, man. So what's your journey been like, honestly, Sandy, from, I know you're a professor now at UT, you've been doing this for some time, but what's the journey been like, from when you first broke into the finance space onto now?
So, I went to law school right after college because my dad was a lawyer. He had this small practice attached to the house. He just helped people like buy houses, buy their home or do their taxes, that kind of thing. So Gotcha. It was really, it was sort of a old school law, type thing where, we were middle class. He wasn't about money. He was just about helping people. And I went to law school. And that kind of job wasn't really out there. I went to a big firm afterward. That's sort of what everyone was trained to do. And, I found that for me, it just had no meaning. It was, we would represent one company against another, and whichever company came in the door first and was willing to pay us, that was going to be our client. And then I went and I prosecuted, really enjoyed that. I don't know that, I didn't want to live like that my whole life. It's a very aggressive lifestyle, but Really? But I enjoyed it. I felt like I was helping to protect victims or sort of make them whole. Got my MBA. Then I managed money and for a short while or for several years, and then got invited back to UT. And I think for me, it's sort of funny. I just finished my 20th year at UT.
Congratulations! That's awesome.
Thank you. And what's funny is that. If you look and you think, okay, I was not trained to end up teaching finance at a top business school. I was a lawyer. And, I think the biggest lesson there is that most of us have no idea where we're going to end up. If you ever told me I'm going to finish at, University of Virginia Law School and end up, that was now 30 years ago, and that I'd now be finishing my 20th year teaching finance without a PhD, how's that happen? And I think that that's the beauty of education, though, right? Is that you can go into other things. It's not that you're locked into doing this one thing, but the whole thing of I'm going to do this and then it's going to lead to this and then it's going to lead to that. Who knows where any of us are going to end up? And that to me is the lesson. The other thing I'd say is that I had several jobs before I ended up here, and it's almost like I was sort of chronic malcontent. It's like, really? I was a lawyer, I was a big firm, and as my dad said, oh, you must have been making too much money, so you have to go take a 50% pay cut and become a prosecutor. It's like I did one thing after another, but the thing I always say is I knew I liked to work, but I didn't really enjoy those jobs. And that just meant I wasn't in the right thing. Like, it wasn't anything wrong with me. It was like, you have to like what you're doing. I mean, most of us, some people are just so mentally strong, not me, but some people are so mentally strong. They can do stuff that they don't like. And they just sort of think, well, it's a means to an end or whatever. I'm not that way. I'm way too weak.
I got you. No, no. So how important do you think that is? Like kind of finding what you like, because like you told us this in class too. Most of your life is really spent working. So how important is it to find that intersection of something you enjoy and you can make a living off, and finding that thing you're passionate about?
It's a great question. It's probably unfair for me to say because I'm doing it. Like I'm not making this up. I love what I do. I love learning. I love being around the students. I love everything about it. And so it's easy for me to say how important it is, but I will say that I did some stuff that I hated doing. And, again, I think everyone's different. I think for a lot of us, for most of us, it's hard to really be your best. It's something you don't enjoy. And I don't know how, like, I don't think I could compete when I was at the big firm. I don't think I could compete with people who love that stuff, and who want to read case law on the weekend. I like prosecuting. I could compete there. But I would say if I go on vacation now, I'm going to be reading, a finance book or an economics book. I just got a book in Amazon today. It's what is it? Engine of Inequality. It's about the Fed and that kind of thing and inequality. I haven't read it. I have no idea what it's about.
Very
But
interesting.
it's good. But
Yeah.
my point is this: if I go on vacation, I'm going to read a finance or an economics book, right? And I know you're thinking, "Well, I want to party with you," but the bottom line is like, that's how do you compete with that, right? That's where you can compete. Is like when and I would say, like, if you want to think about it in your free time, then it's awesome. But with all that said, my guess is that it's going to be younger people closer to your age watching this, and I think one of the things you also have to accept is that your first job probably isn't going to be it, and it's probably going to be your third job or your fourth job. And that I think, like, for me, I kept moving away from stuff I didn't like. And then I sort of, was able to, and I knew sort of what I liked, but I was very lucky. But I think that, while I was a chronic malcontent in moving jobs, which was easier to do 30 years ago, I think that the good thing was I didn't give up. I didn't think like, oh, this is just my lot in life. And, if, as some people say, if it were fun, if it was fun, they wouldn't call it work. But it's like, my work is fun. My work is fun. And that helps, I get up in the morning. I don't think like, oh, I got to go to work. I just like, this is who I am and what I do. I learn and I sort of try to share the stuff I learn.
Yeah, no, and we appreciate you sharing it, man. Yeah, I think I'm young and I don't know much, right? What do I know? But it seems to me that people underestimate the amount of stuff that's out there that your work really can align with what you like, and that gives you that edge in my eyes to dig a little bit deeper. Like you said, if you're not passionate or interested in the topic or whatever you do, you're not going to put in that extra time outside of work, like you said, on the weekend or on vacation, because you're just not into the topic. But when you are, you get that extra drive, you have that extra hours put in, and you can definitely excel. So I think that's an awesome point.
Absolutely. And I think like different things are important to different people. Some people value money or, influencing people or just freedom or, whatever it is. And I think that's a big thing too, is you got to figure out what's important to you.
Self-awareness to say what's important to you. No, 100%. So I want to ask you, so you said the prosecution lifestyle is kind of aggressive. When you're a lawyer and you're prosecuting, do you feel like that kind of courtroom energy, aura can leak into your other parts of life, or what did you mean by that?
Absolutely. I mean, I think that I recognize that as a real danger. I'll tell you a funny story, and if you end up having to cut this out, you can cut it out, but hopefully we can keep it.
Yeah.
But, I back when I was a prosecutor, I remember, I was single. I was on a date one night, and I said to this woman, and I meant nothing by it. I said, earlier you said this, and now you're saying this, like, and I saw the look in her eyes, like, oh my gosh, like this guy is cross-examining me, and I meant nothing by it. And I knew this date was not going to end well, but the bottom line was was that, like that was what I was trained to do. I was trained to listen for little inconsistencies. That was how we cross-examine people, right? I mean, someone's lying on the stand, you're trying to catch that, identify that, and exploit that, right? I mean, that's what you do. And I don't know that anyone wants to be married to that, and
Tough.
even in my first year of marriage, and we've been married 25 years, but in the first year of marriage, Jenny would say to me, "You're cross-examining me. You're cross-examining me." It's like,
That's
okay.
hilarious. That's
So
hilarious.
I think it does leak, and also, I mean, you're so used to dealing with oftentimes bad people, and you sort of think like you're invincible. And I think I think there are a lot of things about that make you maybe not who you necessarily want to be, or who even safe to be.
I see what you're saying. When you're working in that environment a lot, you can see I'd imagine you can see the world through a different lens because you're only working with a specific, type of people. What kind of stuff were you prosecuting against, Sandy?
When you start by prosecuting misdemeanors. DWIs are the most
Ah,
common, that kind of thing, which are actually the hardest cases because they're opinion crimes, right? A police officer says you looked intoxicated. I pulled you over. You seemed intoxicated. As opposed to, I think I had been there 11 months when I, got promoted and was a felony prosecutor. I think at the 13-month mark, I prosecuted my first murder case. I had never seen a murder trial, and I was trying one, and it was crazy. So I spent most of my time prosecuting murderers, rapists, drug dealers. I worked on an organized crime task force that was about drug dealers mostly. For some of the time, but all different types of felonies, burglaries, carjackings, just crazy stuff.
It wasn't necessarily directly related to the financial side of things yet.
No, I wasn't doing anything with the financial stuff then. I actually did later on prosecute civilly for NASD regulation, which there's an old movie, Boiler Room, that people think is about Sterling Foster, who I was prosecuting those guys to get them thrown out of the industry, but it wasn't a criminal prosecution. It was so that they couldn't steal any more money from any more people, which was sort of a very impotent, thing to do. Right? I mean, it's like, okay, you've stolen all this money. The bottom line is we're not going to get it back, and you can't do it again. That's very different than the effect of a criminal prosecution. Absolutely. Where people are going to lose their freedom.
Yeah, a lot of implications there. The biggest one being, the potential loss of freedom. Getting locked up. So, yeah, interesting stuff, man. So from finance undergrad to law school, you learn how to think analytically, and hopefully you could, the key there, it seems, is like knowing when to use those analytical cross-examination thinking skills and when to draw them back. But so you did that, worked as a lawyer, and then went into money management. What does it take to work in money management? What kind of skills do you need to have?
Probably when I went in, it's maybe a little different now. The kind of things that I was doing were more like fundamental analysis, which I think is what a lot of people are doing. But there's such pressure on fees right now because of like exchange. You could put your money in an exchange traded fund and an ETF and pay so little that it's really hard for active managers to be charging a lot of money. But that was certainly a better business, 20 years ago or 25 years ago when I got into it. But what I think is different about that industry that you have to have is you really have to love your work. Meaning, like, no offense to anyone at Dell, but like, if I'm hiring you for Dell, I don't expect you to be like, I love Dell, I love corporate finance. I don't really expect that. I expect that you're going to be competent. You want to work, you believe in what we do, and that's great. But in asset management, it's not that everyone's getting rich. They're not, but some people are. But it's interesting work. A lot of people want to do it. And you've got to really be intellectually curious about what you're doing. And so, what we always want to know is that people loved it, that they're really into it. And I think that that's really different in that field. And like, I know people who are in their 60s, 70s, who are still doing it, and they don't need to be. Like, they've made a ton of money, but they love it. They love the game, and I think that's that's one of the big differences. That, you know, it was funny when I was trying to get in, a good friend of mine was at a firm, and he introduced me to their chief investment officer, and he basically said to the guy, you know, this is before the internet, or the internet was just getting going. He said, this is a guy who on Saturday morning is waiting at the, you know, Quick Trip, the equivalent of a 7-Eleven, for Barron's to arrive. And you know, he was like, that's how much this guy loves it. And that was true. You know, that was a true story of, that's what I did. Like, I couldn't wait to get my Barron's on Saturday morning to find, you know, to sort of think about what was going on. And I still do that. And now Friday night on the internet, it comes out at about 10 o'clock at night. It's awesome. But the point is, I think that's one of the differences is in asset management, you really have to love it. And you know, you got to really be into it, probably more than other fields, I think.
Yeah. It seems like, you know, you're handling people's money, you're managing it. You know, it's a lot of pressure, I'd assume. So you definitely gotta love it and really be detail oriented and be about that fundamental analysis. So awesome. Well, let's dive into these topics, Sandy. So what do the common people need to be aware of and track when it comes to the markets and the economy? Like, what should they be following to just be informed citizens and know what's going on with the economy and what to do with their money?
You know, that's a hard question, because I think for most people, you know, this isn't going to be their passion. I think for most people, that what they should know are, you know, just a few basics, that over time, you know, as the economy grows, stocks become worth more. Now, that doesn't mean you know, they're perfectly correlated or anything like that. You know, obviously last year during the pandemic, right, we had the market dropped significantly, but then the market started doing well, you know, well before the economy recovered. But in the really big picture is that if you believe that the economy is going to be larger than it is now, you know, 20 or 30 years from now, then you believe that stocks are going to be worth more, then the businesses are going to be worth more. You know, a bigger economy, we have more profitable companies, we have higher stock prices. So I would say this, what you need to know is that, you know, ultimately the economy drives the market over the long term. Number two, you need to realize that most active managers do not outperform the market. And so you don't need expensive money management. You know, that you can index your money, and, you know, just meaning that you can buy something like SPY. It's an ETF that tracks the S&P 500, or, you know, there's an ETF that tracks a much broader measure of US stocks and foreign stocks, and you want to have exposure to both. But I think one of the other really important things to know is that you really shouldn't time the market. You know, guessing when the market's going to go up or down, it's a fool's game. And, you know, you think about back, you know, the market bottomed on March 23rd of 2020 during the pandemic. I mean, the world looked like it was falling apart then, right? And the pandemic got much worse after that. But so the point is, if you took your money out and missed all that recovery, you know, you're crying right now. And so timing the market is just hard.
It's hard. It's so hard. And I think I told you this a while back, how, you know, it seemed like, you know, we were doomed. You know, the economy is going bad. All these companies are on the verge of bankruptcy. And I remember, you know, betting that the market was going to keep tanking. And then boom, all of a sudden, a new bull market, you know, Wall Street Journal comes out like a new bull market has begun. And I'm like, what is this propaganda, you know? And then it never ended. It never ended. And now we're seeing some, you know, with all this inflation fear, now we're seeing the market kind of have some trouble this week. And, you know, crypto, I know you have some thoughts on crypto crashing today, but yeah, it was crazy, man. I got burned right there. You know, I took some serious gains when the market started tanking, and I had some, you know, put options and things in place for like the restaurant industry and, you know, airlines, you know, gas, etc. But then when it recovered, I missed that wave. I missed that whole uptrend for a while there. So you can't time it.
One of the things that I would say is it's a lot easier to take your money out than it is to put it back in, because you have to put it back in when everyone's the most scared. and that's tough. And then, the market often recovers quickly. We had 1 or 2 really big days in March of last year, and then all of a sudden it's like, oh, I'm not going to put it in now. The market's up 10%, right, or 15%. I mean, that's why it's such a hard game. But I would say this to you, that if you learn that lesson at your age, boy, you did yourself a great favor. And that's why you really want to get investing early, is because you can't just trade on paper and get the same emotions like that pain you feel in when you're losing money or missing out on money, on gains. There's nothing like it. And so you've got to experience it. And we all make mistakes. I'll tell you a quick story. You'll appreciate this. When I got out of law school, I started this small little investment partnership with these 2 other guys from law school. And we bought this stock, this one stock that we were sort of betting that this bank, it was on the Atlantic coast, was going to recover. And we bought the stock at like $7.50. And, again, no internet back then. This is like 1989, 90, sometime around then. And I get to work, I guess it was 90 or 91. And so I get to work one day and I look in the paper and the stock is now $8.50, which, 7.5 to 8.5, that's a big move. And so a little bit later that morning, I call my broker, again, nothing online, stock's at like 9.5. And, I said, like, is there any news? And they said, no news. And then at lunch, I called, it was like 10 or 10.5. And, I'm now thinking, okay, if this continues, I'm going to be retired. And a little after lunchtime, they had a news conference and they released news that they'd gotten rid of all these bad assets. And I think the stock closed, I could be wrong, like 12 that day, right? And the stock is called Mid-Atlantic.
You had a significant position in this stock?
No, we had no money. We were just out of law school. And so this was tiny amounts of money.
Gotcha.
But anyway, first of all, the lesson is clearly people were trading ahead of the news, right? I mean, clearly this news had leaked out and people were trading ahead of it. So that's a whole nother issue. But, we sold that stock, I don't know, maybe that next week or a couple weeks later, at like $14. And, we couldn't believe like what geniuses we were. And until a year later, when that company was taken over at $50, right? We had sold it like $14. And the point is that, that's how you learn, right? That it's like, you don't just sell, right when there's the initial good news. It's, that stock had a long way to run, and it did, even without the takeover. But, that's how you learn these lessons. I would have never learned that if I didn't, have that little bit of money invested there.
Yeah, you got to have skin in the game to learn it. And like I said, that there's something people really need to understand. Like, this is like an emotional roller coaster. There's some highs and there's some lows, but that's the game, right? You got to act rationally and leave those emotional, highs and lows out of it, and just, keep the boat steady. But
yeah, I mean, behavioral finance.
Yeah, who knows where you would have been if you would have sold at 50, man? You would have been on
exactly. I could have hair right now. Behavioral finance, right? It's sort of what it's all about, sort of the combination of finance and psychology.
100%. So I want to ask you, what do you think about the Wallstreet Bets saga? Like, what's this whole, argument of, the big wigs and the fat cats at the hedge funds versus, the common everyday trader, the common people? What do you think about how, like, this whole thing of investing has changed with, Twitter, Reddit, and, people are able to come together on the internet, and like all these platforms like Robinhood, trying to democratize investing? What do you think of all that, man? What do you make of this whole digital revolution within finance?
So I'll tell you, first of all, just from a completely selfish point of view, like that kind of thing is like my fantasy, right? That, like, as a teacher, when I can come in and start talking about GameStop and all the, this crazy stuff, like, that is so interesting. I love that stuff, right? I mean, I love when we have stories like that, and, Archegos, and, there's just like some things that happened this, just this year. So that stuff, just from personal perspective, it's awesome. But, from more of a, why does it matter? I think a lot of it was shocking. I think that In finance, we always talk about the smart money and the dumb money. And the dumb money is the retail investor. It's you and me, right? It's they're looking to try to figure out what the retail investor is doing, and they do opposite of that. And so the idea of the retail investor sort of all ganging up on the hedge fund and, sort of putting them in pain. Wow, like that's a shocking thing that I don't think we've really seen before. And it's funny because teaching investments and also teaching money and capital markets, I always have talked about short squeezes, and we've seen a few, during my lifetime, you've seen a few that were sort of more notable than others, that, older people might tend to remember more than others. But nothing like this, nothing like GameStop. And so, I think that what you saw, it was good and bad, right? I mean, I think that it's an interesting story. It's sort of funny to see the small guy win.
Yeah.
I think the bad thing is this. I think the bad thing is that we've certainly recently already seen some or less shorting of stocks, because I don't want to be short of stock. It's one thing if I buy a stock for $20 and I know it could go to zero, but I short a stock at 20 and it can go to $1 billion. And, my losses are unlimited. And when you look at that, I think the hedge funds and any short seller realizes now that's a lot of risk. That's a lot of risk to take. And I would argue that short selling is a good thing for the markets, right? We want people to be able to profit when they can find bad news about a company. And so, to not have that bad news priced into stocks, that's how you risk having bubbles. And I don't think that's a good thing. And I as I always say, and I think I probably said it this semester, that without short sellers, then stocks are priced by the average jubilant moron. And I don't think that's good. I think we want to have a stock reflecting the fact that you're bullish and I'm bearish. But if I'm afraid to be bearish, then it's just the bullish investors are the only ones who are there. And I don't think that's good for us.
So just keep rising onto the moon, huh?
Apparently so.
So in layman's terms, what is someone doing when they're short selling a stock? Like what happened here with Wallstreet Bets coming together and saying these hedge funds are shorting GameStop, way over the float. Let's screw them over real quick. Let's catch them.
Sure. So what happens is this. Let's imagine that you own GameStop, and I think it's a terrible stock. Well, what happens is I tell my broker, and my broker owns millions of shares of it on behalf of all the other customers, and I say I want to make a bet against GameStop. So the really big picture, before we go into more detail, is you can buy a stock for $20, hoping it's going to go to 30, and if it goes to 15, you lose. If it goes to 30, you win. I can short a stock, which is just the opposite bet. I sell it at 20, but I have to buy it back later. If I buy it back at $5, I've made $15. I sold it at 20. I sold it first, and then I bought it at 5. But of course, if it goes to 30, I buy it back at 30. I sold it at 20 and I lose $10. So you're just reversing the order. And what happens is this. My broker loans me some shares. Maybe they're your shares that you own GameStop, and they loan me some of their shares. You don't even know about it. And they loan me some of these shares. I sold them at 20. And now at some point I have to put them back into your account. So I hope that I buy them back at 10. But if I have to buy them back at 50 or 60 or 100 or 400, I just lost a lot of money. So I'm just basically making a bet against it. But remember that the fact that I'm able to do that means that GameStop's stock price is a reflection of your bullishness buying the stock and my bearishness, so selling the stock. And so that means the price is reflecting both bullish and bearish views. But if I say, look, shorting stock is too dangerous, even though I think GameStop may be a terrible stock, well, then all you're left with are the bullish people. And there's no one who has an incentive to bring bad news to the market. I don't think that's good.
Yeah, That's crazy, man. So then the short squeeze happens when, the hedge funds are covering their positions and then they're all just running up the price. Boom.
Yeah, absolutely. So what happens is all of a sudden some good news comes out, like with GameStop, you had the Chewy executives who, were who had bought into the company, later joined the board, that kind of thing. But the bottom line is that the stock starts moving up. And if I'm short the stock like the hedge funds were, I'm losing money. And so as that stock goes from 20 to 30, I think I better get out of this position. I just lost $10 per share. So how do I get out? I buy the stock because I already sold it. I got to buy it to put it back in your account. And so what happens when I put in my order to buy, that's more buying pressure, pushing the price up further. Some other short seller gets scared and he or she starts buying back their position. That's a short squeeze. Everyone trying to get out the door at the same time. Everyone trying to close out their short position. And the way they do that is by buying the stock, pushing the price up further.
So then would you say a gamma squeeze is the exact same thing happening, but on the option side of things?
Yeah. I mean, I guess to some extent, I hadn't really thought about it, that much that way. But ultimately, what happens is as the volatility of a stock increases, what happens is the dealers who are hedging have to buy more of the underlying stock, and so absolutely, I think that that's probably a very fair comparison.
Interesting stuff. It was crazy to see. So what do you think of the argument that, like, the hedge funds were saying, oh, these retail investors can't come together and collude and come together to raise the price up? Do you think there's been an element of that behind the scenes in the hedge fund world too? Them being unfair to the retail investor throughout the years too?
Yeah, well, one of the funny things is if you look at the new ideas that come from hedge funds, they all pile into the same stocks.
Uh-huh.
So that's I think that's sort of a disingenuous argument when hedge funds are saying, oh, these little guys are teaming up against us and beating us up. That's certainly what hedge funds, all share ideas, and they tend to be in many of the same stocks. They're constantly talking with each other, getting ideas either directly from each other or through intermediaries like sell side. So I don't think there's anything like that. We have funny securities laws that basically say you can't do certain things that are intended to manipulate the market, but what we're all trying to do is push a stock price up. And so what exactly is manipulation, right? I mean, I think that we have a lot of laws like that are sort of funny. This is probably totally off topic, but just yesterday I was reading a story about a Louisville basketball coach, an assistant basketball coach who is being charged with extortion.
Mhm.
And basically what he said to his employer, I guess he was getting fired, and he said, you need to pay me, you need to give me one more year's salary. Otherwise, people are going to find out about the, some violations and that kind of thing that we've committed. And,
And here we
I'm not sure like how, the difference between, hard negotiation and extortion, right? And it's the same thing when you start to get to the markets where you're saying, okay, like I'm trying to talk up this stock that I want to go up. And, at what point is it collusion and market manipulation? I don't know. I think these are hard issues, but everyone is always trying to talk up their book, right? Everyone is always trying to say, these are the stocks I like, and everyone needs to love them so that I can eventually sell into that,
Yeah, no, it's definitely interesting. There's a lot of controversy over the ability of someone that maybe has 100,000 followers on Twitter to get on and say, hey guys, I love this company. Like, we'll just use Tesla for example. I love Tesla. Here's what I think is going to happen with the stock, and boom, they're sharing their opinion, and then boom, they have 100,000 followers. That you can visually see it on the chart. It'll incrementally push it up from the moment they sent that tweet out. So people have a lot of problems with that. But my thing is, this stuff's been happening for years. Whether you have a big hedge fund manager, he may come on the CNBC and do an interview and say, oh, this stock is incredible, it's going to do amazing. In a sense, that's essentially the same thing. You're getting on a platform that everyone's watching, and you're saying something positive about this stock that you have a large position in, And these are the same people that are talking trash on the people that are doing the same thing within the digital realm. So I kind of see a little bit of hypocrisy there.
Absolutely. And and if that ever becomes illegal, then Elon Musk is going to be in the penitentiary for life, right? I mean, maybe he's not talking about stocks so much, as he's talking about crypto, but you know, that's what he does.
Yeah,
And a lot of people are doing that.
it's so crazy. I remember he tweeted one time. He was like, I think Tesla's overpriced. This is about a year ago, and then boom, you just see it within the hour. Negative
Yeah.
9%. Just it's crazy, man. It's crazy how stuff has changed in this digital space, man. We'll see what happens with it.
And before we go on, I just say, I mean, you think about the education you got at McCombs, like I'm not sure in any of the classes when they were teaching evaluation, they said, oh, and add this in if Elon Musk tweets something positive and subtract this if he tweets something negative. I mean, in other words, we can teach you how to discount cash flows and that kind of thing, but there's a lot more to it in the real world, right? That that a lot of things can move these prices, and maybe those are short-term moves, maybe they're not, but it's it's an interesting world because of that.
No, it really is. So, to your knowledge, is there any way to evaluate those things like sentiment, within the market, the psychology, the more behavioral side of things, in addition to like from my perspective on the marketing side of things, like evaluating a brand
Yeah.
aside from the business? I feel like those are all things that have a lot of gray area, a lot of I don't know, there's a lot of controversy over all those things. What do you see there?
I think you're right, and I think it's the same thing when you start looking at sentiment. It's like right now, people are talking about this extreme bullishness, right? Prior to this week maybe, but just there's just a paper I haven't read. It came out yesterday from GMO, and they were talking about signs extreme bullishness, and like one of the signs of extreme bullishness is that you've got all these companies coming to market. We have sort of we're on pace for record numbers of IPOs. The SPAC whole thing is slowing down now, but still we've had more, I think, issued in the last year than we had in the prior 10 years, or things like that. And so when do people want to sell? They want to sell when prices are high, right? I mean, so that's a sign. But the question is, like, just because something is a sign doesn't mean that it tells you the timing of when to do something. So we watch for the for signs of extreme bullishness, when the volatility index is low, or when there are a lot of IPOs, and when everyone's bullish. But it's hard to necessarily turn it into a signal that that now's the time to sell. Things, people can stay bullish for quite some time.
Oh yeah, oh yeah. It'll be interesting to see, man. Do you think that the time is nearing? With inflation coming about, and people trying to exit while things are high. Do you think that time may be near?
As I said earlier, timing the market is a fool's game, and I appreciate that you think of me as a fool. But I think that's a tough one. I mean, as far as when stock prices come down. Now, there's an article, I think it was today's Wall Street Journal, that was making the argument that when inflation gets up to 4%, which last week the CPI hit 4.2%, the headline number did. That's sort of the danger signal, because that's when the Fed has to slow things down. But of course, the Fed's been saying, no, we're looking at average inflation of 2%, and we're not going to slow things down. So we'll see. But I think you have to believe this, that stocks now are trading, let's say 30% higher than they were, 25% higher than they were pre-pandemic. So the idea that stocks are worth 25% more today than they were before the pandemic, like, why is that? And I think that the only reasons you could say are because of low interest rates, monetary policy, and because of fiscal policy. And so those, if you have high inflation, those things aren't going to continue. And so,
Yeah.
But again, the question is when.
The question is when. So when the Fed is saying, we project inflation to be here, that has a significant impact on how we're expecting things to go down, right? in the moment?
It does, but I mean, I think that people, factor that in, and I think it's mainly investors and sophisticated investors who are watching what the Fed is saying. I think the average everyday person is saying, look, this is what's happening to wages, this is what's happening to my grocery bill, this is what's happening at the gas pump, and they're making their own conclusions. And employers right now are saying, how much do I have to pay to find workers? One of the funny things is right now, you've got, even though we have all these unemployed people, we have a lot of employers saying, I can't find workers. And, as one economist said recently, what employers should really say is, I can't find workers at the price that I want to pay. And so, but that means it's inflationary. If they're going to have to pay more for labor, then ultimately, prices are going to have to go up, or profit margins of companies are going to have to go down.
Interesting. Along the lines of employment, I wanted to ask you, what's going on with the student debt crisis, man? Because I feel like there's a lot of people who say, at the cost of education today, it's not worth it. Some people say it absolutely is. What's going on with, the whole argument around college versus not college, and student debt? What do people need to be aware of? Because this is a complicated issue that people think, they think there's an easy solution. They try to draw an easy conclusion like, oh, college is, a fool's game. You don't have to go to be successful. And other people say you absolutely do. And if you don't, you're doomed. Which I think there's an area in between that's actually correct. Neither of those extremes are correct per se. So what do you think is going on with all that?
Yeah, I mean, I think you look at a lot of, you look at, what Steve Jobs and Bill Gates and Michael Dell, and, none of them have a, 4-year college degree. They might have some honorary degrees, but of course, most of us are not Bill Gates or Steve Jobs or Michael Dell. And so, I think for most people, the, college education is, and I think I said this when we were in class together, is it's like the best insurance policy you can buy to help ensure a middle class lifestyle. In other words, it's not a guarantee of anything, but it can, for most people, it's going to allow them to be middle class. Some people, are going to obviously knock it out of the park and do a lot better, but most people are going to end up in the middle. But they're, if you look at the unemployment rate, if you have a college degree, most of the time, right now it's a little bit elevated, but most of the time it's around 2%. And there are always people every month between jobs. So it's basically, for all practical purposes, if you have a college degree, you have a job. And I think that, it's been closer to 4% in the last couple of months, maybe a little bit beneath there now, but even that is very low. And so, of course, some people don't have jobs that require a college degree, but they are employed. And so, I think that college for most people still turns out to be a winning bet, but it's not as much of a winning bet as it used to be, because you've paid more for college than, my generation did. And, wages, certainly up until now have not been going up as much as the cost of education. So if it's costing you more and you're not getting as much benefit, the value isn't as much. The value is still positive, but just not as much. I think also you have to distinguish between schools and degrees and everything else. I mean, you can't, most of us don't believe that, just college is college and any degree is the same. There's a signaling effect at least that comes from going to a good school. Hopefully there's also a really good education that comes with it, but certainly there's a signaling effect that you got in and you completed that program. I think, but also, you can go to the best schools and, you've gone to one and if you study, you're in the business school and the opportunities you have are going to be very different than some of the other people on campus who are, that I'm not going to start naming programs because, before you know it, I'll be fired. But the bottom line is that, some programs do not set you up to make a lot of money.
Yeah.
And, if you still come out with student debt and it's unfortunate because, we want people to go into a lot of these fields that are lower paying. A lot of them have tremendous social value for us, but, how does that work out financially? So, I think that there are a lot of issues like that, as far as the cost of education.
No, I think it goes back to self-awareness, like we were talking about earlier. Like what do you value? What are you aiming to do, right? Are you looking for more financial stability? Are you looking more to give back to the community in one of those other roles? What is your situation, right? Like, obviously, if you're taking on a significant amount of debt to go to college, I feel you should analyze, what kind of job, what kind of pay I'm going to be able to get afterward to pay this off. You can't just think about giving back to the world, through maybe some other kind of social route, maybe a social worker, things of that nature, right? There's just so many variables that need to be analyzed in terms of what you want to do, how much it's going to cost, what the payout's going to be. And, those are factors to definitely consider. So, yeah, along the lines of the student debt crisis, how big of a problem actually is this, Sandy?
So, and let me also say that, I mean, like, I totally agree with you. The problem is, like, can 18-year-olds or even 17-year-olds, when they're thinking about college, like, can they think about those decisions?
Yeah.
I mean, just even realizing like what different jobs pay and how difficult it is to get these jobs. I think that those are really tough issues. And I don't think, I think we probably need to disclose a lot more than we do,
Yeah.
meaning I think you should be able to go to the University of Texas and, right on, it should be one click away where you can see that, okay, if you study finance, this is what your average starting salary is. This is the range. This is the median, and then, if you study history, if you study art history, if you study, drama, whatever it is, these are the salaries. But I don't think that information is made as available, right? To people.
No, you got to go down a rabbit hole to find a lot of this stuff. Like, if I study, this, what am I going to work in? What's my pay going to be? You really got to dig for those kind of things. And it varies, depending on school and depending on program and the network effect, who you're going to meet. And it's hard when you're 18 to know what you like, what you don't like. Like you were saying earlier, it's important to find what you like, but it's just as important to find what you don't like and kind of use process of elimination there to see what you want to do with your life. But it's kind of crazy to me. It's kind of daunting that 18-year-olds are expected to decide, I'm going to study this and it's going to affect the rest of my life, and it's going to affect potentially 40 to 60 years of me working, and it's a daunting decision at that age. So
it is. And one of the things I see all the time, like when I was teaching the MBAs, I would see all these kids who are coming back for their MBA who, when they were 17, their guidance counselor or some adult said to them, "You're good at math. You should study engineering." Right. And so they studied engineering, and, they probably had a miserable 4 years because studying engineering is so much harder than doing anything else. And then they got out. They didn't really like the work. They heard that it was the highest paying, and it is, but it doesn't really go up from there. And then they don't enjoy it, and people look at them and say, "Well, you're an engineer. Like, why would I hire you to do this? You're an engineer." It's like, I was 17 and someone told me I was good at math. Like, that's all that happened. It's so I've seen a lot of that. It's discouraging.
No, there's a lot of that, and there's also a lot of pressure, from parents and family. Like, this is what dad did. This is what grandpa did. We were doctors. We're family of doctors. There's a tremendous amount of pressure for you to go to or to go to, medical school. And you're like, "No, well, dad, I want to do, this. I want to do something with art, or I want to do something with, marketing," whatever the case may be, or, someone getting pressure to go into finance. There's a lot of variables in terms of pressure from, the family and society. So it's hard to get a clear vision of like what I want to do. And hopefully through this podcast platform, I can kind of give people a little space to see like, okay, these are the guests I brought on. This is what they studied, what they ended up working in, and how they liked it. So
And yeah, I'll tell you a quick story about that. That I studied accounting undergrad
uh,
until like the last semester I changed to finance and I had to take 1 billion hours. But I was studying accounting and I was going to go to law school all because I just love my dad. I mean, he ended up being best man at my wedding. All that stuff. I mean, we were just really close. My dad was a lawyer and accountant, and so he wanted me to do that. So I wanted to please him, and it was actually my older sister who. One day I was telling her just how much I hated accounting, and she was like, change. She was like, Dad'll still love you, and it's funny because like I also remember when I left the law firm and went and prosecuted, my dad thought I was crazy, right? Any parent would. I took a 50% pay cut to do that. And I know he thought I was insane. A month later, he was down watching one of my trials. You know what I mean? I think at the end of the day, parents love their kids, and parents want their kids to be happy. And one of the things that happens is that because we never know if we're going to be happy, the one thing we do know is, well,
at least I'll have some fun.
$80,000 is more than $40,000. So take the 80,000, and it's just, it's stuff like that.
Yeah. I think it's a big misunderstanding of, parents just want the best for their kids. They want to be financially stable. They don't want them to struggle. And that's where it comes from. It comes from a good place. It's just, they don't want to see, all these extra risk factors. So I definitely, while I don't understand it, because, thankfully I'm 22 and don't have kids yet. But yeah, I'm sure one day I'll understand that sentiment, but I respect it. It's just a misunderstanding of intentions there. But good thing you took that bet and you went and did your thing, took that pay cut, and here you are now. So what are some variables people have to keep in mind when it comes to student debt and how to look at it? Like, why is education increasing in price so much? And it seems like the benefits for a lot of these universities, especially the smaller ones, a lot of the private ones, it seems like the benefits are not as high as they once were.
Yeah, I mean, I think when you start looking at why the cost has gone up, you've got a lot of different reasons. One of the leading thoughts on it is called the Bennett hypothesis, where basically we say that the idea is because the government has made money available to students so that they can borrow, then schools realize, well, then we can raise tuition because you can access money. And then once we raise tuition, then the government has to loan you more money, make more money available. Oh, the government's made more money available, we'll raise tuition, right? It's just, it's just a spiral. And so, you see that, there are all different theories. There are theories that, we're hiring many more administrators, whether to deal with regulations or run other programs, who aren't adding to the teaching function or the research function at schools. We have better amenities at schools that we're competing with each other. There's a signaling effect that, the public schools used to be so much cheaper. They still are in most cases, but that, then people thought, oh, well, you get what you pay for. So, we wanted to raise our tuition in the MBA program, for instance, so that, we were seen as good as the private schools. And so, you have loads of different issues like that. I think that, the big problem becomes that, you have, in many cases, particularly with undergrad, you have an uninformed consumer, right, who's 17 or 18, and so they don't know the consequences of the debt. The biggest problems, though, are when you have people who start school, take on debt, and then don't finish. You have, a huge amount of debt that comes from or for-profit schools, I should say, for-profit schools that, the evidence is that a small percentage of students actually graduate. Those that do oftentimes don't get any bump up in pay. And so, you've got people who are taking on debt that doesn't do anything for them because they don't finish their degree or it's not a valuable degree, then you've got a problem. A lot of the, there's a lot of
but when you say those types of schools, you mean like the ITT Techs, the DeVrys of the world, like those?
Absolutely, right. The for-profit schools, correct. You have the public schools, the University of Texas type, University of Georgia, University of Alabama, that type of thing. Then you have the nonprofit schools, the Harvards, the Emorys of the world. And then you have, as you said, the for-profit schools, the ITT, the DeVrys. Some of them okay, some of them not okay.
And who
Um,
is it that, puts these for-profit schools into place? Is it like private equity firms, or who is it?
Well, they ended up being funded a lot, later on they're by private equity. Some of them were public companies, all different, ownership from there.
So a heavy cost on those, and really no return on the investment that we can see.
For many people. And one of the things is, like, we hear this debt number, there's like $1.5 trillion of student debt out there. And you really have to look more closely. If you finish UT with $20,000 or $30,000 of debt, that's a car, right? And I would argue that there's no question that a degree from a top university like the University of Texas is worth more than a car. And so I don't have any problem with someone coming out with that debt.
For sure.
Now, with that said, it may influence, unfortunately, what you are going to do. It may mean that you have to take a higher paying job, which, that sounds like, oh, boo-hoo-hoo, I have to take a higher paying job. But you might not want that higher paying job. You might not want to go be a banker. You might not want to be a consultant. You might want to go do something in a nonprofit. Maybe you can't now because you got to pay off your debt first. And I think that's unfortunate. You go to the graduate schools, and I think, like, our MBA program is in the high 50s, I think, per year just for tuition. And it's a lot of money. And again, what does that mean? It means you got to go be a banker, a consultant, go work in tech on the West Coast. That's what people are doing, because they don't, you've taken away, or you've limited the ability of people to go to an elite business school and then go work at a nonprofit. And I would argue we want those ideas from business school to be transferred to the nonprofits. We want them to be as efficient as possible. A lot of the debt, I don't want to say half, but almost half of the debt is going to end up being at, the large amounts but from students who are going to professional schools, medical school, law school, business school. And for those students who actually like what they're doing, it'll all work out fine. They'll make the money. But again, you can't go be a lawyer and work on a social issue if you've got $150,000 of debt. But if you're going to be a doctor, again, you can't go to a clinic, but you can go make that money back. So we sort of have to, we talk about this in such broad terms, but we probably have to think about it, in a more nuanced way.
Yeah, no, that makes sense to think about it in a nuanced way, because it just seems like it's it's not the end of the world, right? If you're in a lot of debt, but it just seems so restricted, right? Like you're not allowed to take that risk anymore. Maybe I learned these things in business school that have given me the insight to go start a business. I see some problem that I can go create a product to fix, and I really can't take on that level of risk. Risk not making a lot of money, risk all these other things, because I have to pay off this debt. Or like you said, it seems like there's a lot of societal implications there in terms of these super intelligent people, these lawyers, these business students, or people from all different backgrounds within academia, that they can't go do lower paying jobs that benefit a lot of the problems in society, whether it be people trying to work to solve problems with addictions, or social engineers trying to figure out, like, for example, the homeless problem, how to kind of fix that. It seems like there's a lot of brain power that's being missed there, because people have to go out and pay off this debt. So
Absolutely. And your point about the inability to go become an entrepreneur is a killer. I mean, it's a killer not just for the individual, it's a killer for all of us. That's where so many of our productivity gains come from. These new companies that find new and better ways to do things, as well as the pressure they put on the bigger established companies to become more productive, because this new entrant is competing with them. So it's a killer if we lose some of that. And you're absolutely right.
yeah, that's interesting. So what would you say, if you could sum it into like a sentence or two? What does someone need to consider before taking on debt to go to a college? Like, what do they need to consider in terms of what they're studying, what potential job they might get, what the university has to offer?
I think that's exactly it. You've got to understand what the true total costs are, and you've got to understand what the perceived benefit is. And you've got to look at that financially. You've got to look at what the intrinsic value is of just being educated. But you've got to understand how that will impact your lifestyle in the future. And so and I think just the idea of realizing that you go across our campus at the University of Texas, and the salaries that are made by the engineers and the business students are just so different than many of the other programs. And you've got it, so it's not just like one salary that I see stuff. I've got next year I'll have 2 in college, and it's just you look at these numbers and it says, oh, the average graduate makes this amount. Well, what's the average graduate, right? I mean, they're all different majors, and and so you sort of have to understand it. What's an economics major make, and what's the history major make? You've got to understand that.
Yeah, yeah, no, you got to understand all those variables. It's definitely, like you said, it's hard to, like, what is an average college student? You know what I mean? How long did they take? How what did they study? There's so many variables that, like I said, it seems like these things are very hard for an 18-year-old to go down the rabbit hole and find, but you got to do it. You got to understand, what does my school have to offer in terms of network? Because I feel like me coming to UT, graduating this Saturday, super grateful that I've been here. Awesome.
Congratulations.
Thank you, sir. Thank you. So I've met, ambitious, awesome people and amazing professors, like yourself, like I said, but I feel like the network effect is huge. The brand is huge, so these are things that I didn't know coming in, but I recognize that now. So just having the ability to see, like, okay, this school has this kind of brand. Is it well known? What kind of network do they have internally and externally? What kind of people can I learn from? Who are my peers going to be? They say, show me your friends, I'll show you your future. Who am I going to be surrounded by that's going to affect the way I think and operate? So there's a lot of variables to consider in terms of that, how the return on the investment is going to be. And then also, like, okay, if I take out X amount of debt to do this, is it worth it?
Yeah.
Taking 50 or taking 100,000 in debt to go be a doctor is different than taking 100,000 in debt to go do something else. So things to keep in mind. But Sandy, thanks for breaking that down. It's definitely a interesting topic, and it's a growingly dangerous environment, it seems, in my eyes, in terms of the student debt just keep running up, man. So yeah, any other thoughts there, man?
No, I mean, I guess, well, what I would say is that, and I'm not saying this as a UT guy, because my 2 oldest kids who will be in college next year are going to private schools, but I would say there's no better bargain than the public universities that we have. And I'm not just talking about Texas. We happen to be blessed with highly ranked schools, and and of course in Texas we also have Texas A&M, which I always joke about the Aggies, but it's a great school.
Yeah.
But you can go to lower tier schools in all these states, and just meaning still like the flagship universities at these states, or the second school in these states. And first of all, they all have honors programs, and they're excellent. And because of these high costs, you're getting kids who are incredibly smart at some of these schools that may be seen as average, but you put them in the honors program, forget about it. It's awesome. I can tell you this. I went to Alabama undergrad, and when I was there, it was at best average, and I loved it, and I had so much fun. But I go back for this advisory board I'm on for this fund, this student fund that they have, and you go around the table, and we went around the table and asked these students who are on the fund, like, where they're from and what their ACT score was, and the guy who put up the money and I were sitting there with the students, and they're going around, and they all had like 35s on the ACT. And I said to the students, I was like, yeah, CT, the guy who put up the money, I said, CT and I, had a 35. He had an 18 and I had a 17. I mean, it's just a totally different world now, right? With these guys. But the point is that you now are attracting this level of student to a public university like that you weren't before, because they're giving scholarships to these kids with high ACT scores, and they're getting unbelievable talent. And the difference between these schools, I always said, having gone to Alabama, Virginia, and Texas, is how far down you could go and still get just an awesome student. Like, I think when I was at Alabama, it was like you could go 15%. I think now you could go 60%, or whatever it is. You could go much deeper. I think when I was at law school, you could go 95% of the way down, and you still got someone who was at the top of their undergrad class. You could probably go 100% of the way down. It was just, and I think that's a difference. But I think these public schools are so much better now. And because who wants to pay for these private schools?
No, that makes a lot of sense. And then, that speaks to the power of Nick Saban and the Alabama football team over there. They've created a brand, and, people want to go there and have a great time,
Absolutely.
Winning a national championship almost every year, it seems like, is definitely a recipe for a fun time. A lot more tailgates, a lot more parties, a lot more drinking. So,
I mean, yeah, absolutely. I mean, I think he's done amazing things. But you'll see that even schools that don't have that dominant sports program, a lot, the SEC schools are killing it because of like the 6% rule or 10% rule, whatever we call it now in Texas. But they're getting. I mean, University of Arkansas. I mean, my guess is they have lobbyists sort of trying to get that 10% rule lowered to the 4% rule, because they're getting all these kids who don't get into the University of Texas. They're getting at the University of Arkansas. They're cleaning up.
That's actually my brother. He didn't get into UT a couple months ago. He's on his way to Fayetteville. Walton School Business. Awesome school. He's gonna have a great time. So yeah,
everyone. Half my neighborhood goes to the University of Arkansas, I think. I mean, they're killing it. They're killing it because of us.
Everyone goes to Arkansas. It seems like half of my high school class went to Arkansas. It's an awesome university. It's an awesome town. It's a fun place to be. So props to them. But still,
and it's more awesome because they're getting all these kids who I wish we were getting.
Yeah, no, 100%. It's an interesting situation. So if you had to put a cap on it, what's going to happen like next 100 years, 50 years, even with the student debt? Is there a time when it becomes a problem? Does the bubble pop, or what happens?
The thing about student debt that's different is, everyone thinks about it as like mortgage debt. Well, mortgage debt, was held by investors and banks, and student debt is really largely held by the government. And so, when you look at the government and the government's debt right now, and let's say the government's debt is, depending on how you measure it, if you measure just the debt held by the public, you're looking at, let's say, $23 trillion. You look at all of our debt, you're looking at 28 trillion, maybe a little more. So even if all that debt got defaulted upon, you're adding $1.5 trillion of debt to our debt. Meaning, I mean, that's not good, but it's not like the disaster that that if all this got defaulted upon and the banks had losses. It's just a different situation. Again, I'm not saying it's good. I'm not saying it should be excused. I'm just saying that when you look at it, it would increase our government debt by 3%.
Yeah. Okay. Interesting, man.
But it impacts individuals' lives.
It impacts individuals' lives, and that in turn impacts the economy. Maybe there's in ways that we can't even measure, right? Because like we said, the opportunity cost to society of just not having those certain individuals and maybe these other roles where they could, help improve society. So
and young kids who grow up poor and think, oh, college isn't for people like me.
Yeah.
We lose out, they lose out, we lose out on their productivity. And that's terrible.
100%. I did community college for a year, and some of the people I met there, some of the smartest people I've come across. And, some of those people wouldn't go on to graduate, leave the community college, go to a 4-year university and graduate. But it just leaves me thinking all the time, there's so many smart people in the world that are just not in the environment to end up going to college. Maybe they had something growing up. Maybe they had to provide for the family, they had a kid, whatever the case may be. And, I just wonder how we could get those smart people in the door so they could, help out society. Not that they're not, right? But, there's some genius. Like this one girl I met in community college, she was an absolute mathematical genius. And I just wonder, because she didn't end up finishing. And I just wonder, like, man, what could she have done given a different circumstance, or other people in society that they automatically rule themselves out for college. Like, oh, college isn't for me just based on where I'm from. I'd warn against that thinking. I definitely warn against that thinking. It if you work hard and you do what you need to do, it can be for anyone. If you think it is for you, if that's something you'd want to pursue, I think it's dangerous to just count yourself out of anything.
The problem though is that some kids like count themselves out way too early before they realize that, oh no, it is possible. And I'll tell you another comment, something you just made of the community colleges. The community colleges are gateways to these to good jobs as well as to four-year colleges. And in the pandemic, we saw a huge drop in new entrants to the community colleges. And so you're often talking about kids who start off there, some of them lower income, that they want to get the credits for cheaper cost before they go on to a University of Texas or wherever it is. And, we're losing out on that. And will those kids come back next year? And, I don't know that we're going to see them.
Yeah, no, it's interesting, but community college definitely is a smart way to knock out like those basic credits without having to pay university prices. Like it just makes sense. You're learning essentially the same topics, you're paying a way cheaper price. It'll give you the opportunity to maybe graduate earlier, save some more money. So it just makes sense at those, lower division classes. But Sandy, moving on, man. So I feel like you're a guy that has it figured out in the sense of you've worked in a bunch of different areas in life. You learn a lot of things. You've made the money. You feel like you're in a good place there, but above all, you're happy. You love what you do, and not only do you love what you do, like kids think that you're giving back. Like me, I feel like a lot of the advice you've given me has helped me in my life, and I know others I've talked to, because they're the ones that convinced me to take your class, right? So, what does someone need to do, man, to kind of figure it out, to be not only like financially successful but also be happy and fulfilled in the way you are? What kind of philosophies do you have there that have helped you?
Yeah. So first, I just want to say, like, just because hopefully a lot of people are watching who don't know me. I don't want people thinking like I'm some rich guy or something like that. I'm not. I'm a guy who's saved. Who's saved. I didn't make $1 billion and come back and start
Not a
teaching.
billionaire,
Yeah, but
also,
no, but
also,
but I mean, obviously, like, I can send my kids to college and that kind of thing, and that to me is success. But I think that one of the things that you realize is that early on you think about money because like it's the only thing you can compare, because you don't really know what work is like. Even having internships, like, and I had plenty of them, clerkships in law school, that kind of thing. You don't really know what work is like till you get there. Like, and because when you do an internship or clerkship, it's going to end in 10 weeks or 12 weeks, and you can go back to your naps during college and everything else, like the best things about college, right? But but once you get there for the full time, and like it's not going to end, it's a whole different feeling, and like problems don't go away at the end of the summer. You still have that lawsuit that's sort of a nightmare, or that client that's really hard to deal with, or that kind of thing. And so it's just a really because you don't really know that, we tend to judge all these things by money. But then you end up working, and I would argue that for most of us, as long as we have enough to pay our rent and eat and save a little and that kind of thing, that has no bearing on your day. It has zero bearing. Like I honestly, and again, I'm comfortable enough that I don't worry about money, but I spend a lot with college and everything else. But like the last thing I think about during the day is money. And that was even back when I was younger. It's like am I enjoying what I'm doing? I'm either happy or I'm sad, because for me, it was like the nature of the work. That's what mattered to me. For a lot of people I know, it's like who they work with, and that kind of thing. But, I would just say, like, I think that, you sort of have to figure out like what it is that motivates you. Like I realized pretty early on that being at a big law firm had no meaning to me. Like, and it helped me to learn that, like, I had to be doing something that I thought was important. And, for me, prosecuting was important. I felt like I was an important member of society. And teaching, I think, is really important. And, teaching for me is sort of the best of all worlds. Like, I'm getting to learn. I'm around young people, all the time. I'm on a college campus. Like, that stuff's awesome. So, but I think, like, a lot of people, a lot of my friends, I'm sure, look at my job and they're like, yeah, that would be miserable. I would hate to be doing that. I love it, but I think that, other people get their self-worth by, making $1 billion, and that's fine. But you've got to be honest as to what motivates you, because I think that, these days are long, they're long as far as what you're doing. And I think that, like, I think I work harder now than I do as a lawyer, but it's not really work because I enjoy it. And so, like I said, I woke up in the middle of the night when I was at law firm, and I'd be miserable. I'd be thinking about stuff. Oh my gosh, I hope I didn't mess this up, or, I'm not going to get chewed out in court, whatever. It's like, I wake up, I don't think that, oh, I'm going to work today. It's just like, this is what I do. Like, I learn, I'm going to try to learn stuff today to pass on to others. And so my point is, like, everyone's different, and you got to figure out what, is it status that you want, and I'm not saying that's a good thing, but maybe you do, or maybe it's money, or maybe it's influencing others, maybe it's having a positive impact. You've got to figure it out, because, like, what moves me isn't going to be what moves you, and, vice versa. And I think that when you can get aligned in, in that whatever motivates you is what you're able to do during the day, I think that's when, it's sustainable.
Yeah, no, I love that answer, man, and that's awesome. You get to go through the day, and you don't have to think about money. It's just I'm doing. I have a lot of stuff to do, but to me, it isn't work. It's stuff I enjoy. That sounds like an awesome life, and it's like you said. You got to know what you want to follow, what you're going for. If it's giving back or status, money. I guess I just warn against. Obviously you have to make a living, but I guess the status stuff is I feel like, have you read this book named Drive by I think it might be Daniel Pink, I want to say. It talks about extrinsic and intrinsic motivators. And basically, something extrinsic might be, like status, for example, right? And an intrinsic motivator may be like you like the work, you find it interesting, you achieve like a flow state doing it, right? So it says that, like, when you pursue a lot of this stuff like status, money, at a certain point you achieve it, and then you're like, okay, what now? What now? I haven't handled this relationship with myself, right? So I think it's awesome that you have that intrinsic motivation of what you do in terms of teaching and learning the stuff you do.
Alec, let me sort of tell you something I always say at school, and you can tell me if I'm wrong about this. But I always joke about, in with our students, and that is that I feel like, and maybe this is mostly talking to finance students or, business honors or whatever it is, but I always joke that they think that there are 3 types of people in the world.
Uh-huh.
There are bankers, there are consultants, and there are losers, right? I mean, it's like, and that is just not true. It's not true. But my point is, like, that status, I think a lot of it is status. It's groupthink. It's like, oh, if you're an elite student, you end up at a banker consulting firm, and many of them do, and many of them want to be there. But I think a lot of our students go there, they don't really want to be there, but it's just, I want to be a winner.
Yeah.
I want to be a winner. And if I'm a winner, And I think that's sad, but so I think it's consistent with what you're talking about in that book Drive. But I think that I think that we do in school sometimes, and I think the school promotes it, right? I mean, the school wants you guys to make the most money, so we have the highest starting salary, because if you guys are making a higher starting salary, that must mean I'm smarter, right? That that I'm a better teacher, right? It's not what it means, but that's, I think the school wants you to make more money, so you give more money back.
No, it is definitely a very interesting point, because I feel like, and Maccombs is an awesome school. Blessed to have gone there. Super grateful to have been there. Had a great time. But I do feel like there is an element of them fostering this culture that can be at times seen as toxic, in terms of, we want to push this competitive environment, from the grading scale to everything else, in terms of want to push it to where people want to get the best paying jobs, bankers, consultants, etc. And like you said, it's the nature of the game. People want to be a winner, and if the rules are painted to that the winners get those jobs, then people act in that manner. So it's just it's an interesting thing.
Well, and I mean, we get how hard it is to get into Maccombs. I mean,
Yeah.
it's crazy, right? And so you're getting all these kids who are uber competitive already, and what I always say is, you're taking this like top 1% of society, and then you're grading them and saying, oh, well, you're the A student and you're the A- student. It's like, what? This is like the top group. And I think that it's one of those things where it's like, we haven't really found a better way to encourage people to study.
Yeah, that's interesting. It's along your big mantra, right? Focus on knowledge, not grades, right?
Absolutely.
Yeah, that's I don't know, man. I don't know. It seems like the grading system kind of incentivizes all that stuff from even like, K through 12 levels. So I am curious to see how we could fix that in the future. But Sandy, I don't want to take up too much more of your time, man. I really appreciate it. We went almost an hour and a half. So really appreciate your time, man. And yeah, I'll be, how can people find you, man? How can they find all your stuff?
Well, you can always find my stuff at sandyleeds.com, SANDYLEEDS.com. I put out a market update, a summary of sort of what's going on each week in the financial markets. So that's probably the best place to find me.
Awesome. Well, you heard it here first, ladies and gentlemen. Sandy Leeds. If they gave this man the keys to the economy, he'd probably fix the debt crisis. He'd probably fix all the debt crises throughout the world. He'd have us in check. Sandy Leeds, ladies and gentlemen. It was a pleasure having you, Sandy. Pleasure talking with you again, my man. Thank you for doing this.
Same here. You're awesome. Thank you so much, Alec.
Don't be such a smart aleck.